I'm so excited for this next guest that I actually woke up at 3 a.m. today. That's not even a joke.
Oh,
Uh,
you jeez.
Thomas Healy is the founder and CEO of Hyllion. He joins us now. Thomas, good morning.
Hey, good morning. Thanks for having me on.
Okay, a lot I want to get to here. So let's just start off with this. You guys announced the reverse IPO with a Tortoise acquisition a few months ago. That's going to close in September. Explain what you're doing. How is it different than what Tesla and Nikola is doing? Because you're in the same field, but you're going about it differently. So explain how you're going about electric trucks that's different than Nikola and Tesla.
Yeah, no, you hit the nail on the head. I mean, we're all focused on electrification, right? And bringing electrified powertrains to the commercial vehicle space. But the difference is, how do we generate the electricity to actually drive the vehicles? So with Tesla, they're using the grid to recharge their truck, right? With Nikola, they're using a hydrogen fuel cell solution. With our truck, what we're doing is we're actually leveraging natural gas and using that to produce electricity locally on the truck to actually charge the batteries up. And there's kind of three differences when you look at these solutions. You got to look at what's the total cost of ownership, what's going to be the emissions levels from those vehicles, and how much infrastructure is out there to recharge them. And that's what fleets are going to really care about when they decide what trucks they're going to go with.
So you're using renewable natural gas and compressed natural gas, and you're also not just building your own trucks, you also are building your own powertrain system that essentially goes onto existing trucks that essentially any truck can use, more or less. So you don't have to build your own fleet to make any money.
We're focused on the powertrain of the vehicle, right? So very similar to what Cummins does, right? When you go buy a brand new Freightliner truck, you can spec it with a Detroit engine, a Cummins engine. Well, Hyllion is another powertrain provider. And so we're actually working with the existing truck OEMs like the Volvos, the Peterbilts, the Freightliners, and putting our powertrain in those vehicles, as opposed to taking the approach of, hey, let's do a total clean sheet design of the entire truck. Which we viewed it as, the area for evolution in the trucking industry right now is really in the powertrain, right? We need to bring electric technology forward. And we figured, the trucks that the OEMs already make today are great, right? I mean, they have a lot of great features. They're already tested. They've gone through, safety validation, crash testing. And the thing that we can come in and do is bring a new powertrain to reduce the total cost of ownership and save in emissions.
So you're relying on natural gas instead of the grid or hydrogen fuel cells, but there's a reason that natural gas hasn't caught on, right? It's because it's not as efficient. So how do you get around that?
Yeah, so natural gas is not a new fuel source, right? You can actually still go buy conventional natural gas trucks today. The problem with those trucks is they're significantly underpowered compared to a diesel truck. We took one of them and put it on a dyno, and it was producing about 260 horsepower at the rear wheels, right? So when you compare that to a diesel, it's significantly underpowered. And so there's always been a resistance from fleets and from drivers to moving to natural gas because the vehicles don't perform as well. And so, what happened though a handful of years ago is, natural gas was thought to be this fuel of the future for the trucking industry. But when fleets started adopting it, they started running into some of those issues. But the benefit that we have is the infrastructure got built out during that time. There's over 700 natural gas stations already out there across the US. And so what we're doing is we're looking at it and saying, hey, there's a ton of benefits of natural gas. It's an extremely low cost fuel solution. You can be in about a dollar per diesel gallon equivalent, right now with the cost of natural gas fueling. There's the existing infrastructure out there, and there's with that renewable natural gas, you can have a net carbon negative emissions profile. So let's take all of those benefits, but overcome that underpowered and underperforming vehicle by using an electric powertrain, which has way more horsepower and torque than even a conventional diesel truck does.
So the fact that the infrastructure already exists means you don't have to build out your own infrastructure, unlike electric charging stations or hydrogen fuel cell stations. You don't have to build out your own infrastructure. It's already there.
Exactly. And infrastructure, I think, is going to be one of our biggest challenges as, the industry tries to shift towards electrification. Infrastructure is the big question mark right now, right? I mean, it's costly. I mean, we had one fleet tell us, they went and got quoted for moving their whole distribution center over to fully electric semi trucks. And they got quoted $30 million by their utility to put in rechargers. And so, and not only that, we had another fleet tell us that they went to the utility and, that they gave us a story. They were like, look, the utility provider laughed at me when I handed over the spec sheet because there's not that much electricity available, right? Electric trucks consume a tremendous amount of electricity. There's a study out there that shows, plugging in 2 semi trucks to charge off the grid is equivalent to the amount of electricity consumed by an entire truck manufacturing plant, right? So it's a huge burden on the grid, and so that's where us having the ability to just tap into a refueling network that's already out there just really accelerates the business plan of what we're going after.
So who are I mean, you sort of mentioned it, but can you talk about some of the deals you have with companies? How many deals do you have with companies for your powertrain technology, I guess, if you want to call it that? How many deals do you have, and how many people, what is the demand like for your product?
Yeah, so stepping back a little bit, there's actually 2 products that we're bringing to market. We've been talking about the Hypertruck ERX, which is a technology that we're going to start delivering to fleets next year in 2021. But we also have a second product that's a hybrid electric product that's really a add-on to existing trucks. You can get it put on your new truck or as a retrofit. And that technology, we've already started rolling it out in low volumes, but some of the large fleets like Penske and Ryder, Ideal Lease, CR England are already running that technology. And so, we've already started building some of those really strong fleet relations, as well as kind of those learnings of how do you roll out a solution to this market. But then, we're kind of coupling that into being able to deliver the Hypertruck ERX next year. And the one, announcement we've had on fleet engagements on that side is Agility Global Logistics, which is one of the leading logistics provider worldwide. They've come in and placed a 1,000-unit pre-order for our Hypertruck solution. And so we're going to start delivering vehicles to Agility next year, and then continue on in the years ahead with fulfilling that full order. And what's really exciting to us is Agility has truly a global footprint. So not only are we going to work together on deploying the technology here in North America, but also overseas, which as you look at kind of the landscape here, emission savings opportunities overseas and using clean fuel sources is actually in some ways even a stronger opportunity than it is here in the U.S.
First of all, we are on the line here with Thomas Healy. He's the founder and CEO of Hyllion. Just wanted to ask you, you said the conversation with Tortoise started pre-COVID. Why go public via SPAC right now?
Yeah, so earlier this year, we had kicked off kind of our financing process, right? We knew we were going to go out and do the next round. We looked at keeping it public or going public, keeping it private. We decided that going the public path made the most sense. And then as we looked at kind of the conventional IPO path versus the SPAC path, the SPAC path had a lot of benefits. It was a faster process. We met with the Tortoise team just before COVID lockdown really happened. And, there's a lot of synergies there. The team had viewed a lot of the kind of problems of, moving towards electric the same way, the opportunities of leveraging existing fueling stations and leveraging natural gas. And, renewable natural gas is kind of one of these things that a lot of people don't know about, right? It's a great fuel source that's fantastic for our environment, but it's not spoken about all that much. And so we saw a lot of synergies on that side. And we saw it as a way where we could do this transaction and fully fund our business model, right? That was one of the big benefits of it. With the capital that we're bringing in, it puts us in a position where we don't have to go out and raise additional cash in order to fulfill this business model.
And how has COVID impacted your timeline and projections?
Yeah, there's been a slight delay in things, but it hasn't been a huge impact. Thankfully, we've been able to keep our facility still running here in Austin, Texas, with still moving a significant amount of the workforce to remote during this time, though. But the biggest impact we saw is some of the OEMs shut down their manufacturing plants, and so we had scheduled deliveries that ultimately got pushed out a little bit just because the trucks weren't built yet. But now we're seeing kind of the influx of, those trucks are being built and they're getting delivered, and we're installing our hybrid system on them. So ultimately, all the projections that we've put out there, we still see as being on track and still very achievable, even with all that's going on with COVID.
So you had announced that the reverse merger will be completed sometime at the end of this quarter, Q3. Is that still the case? You still on track for that?
Yeah, it is. So what I can kind of talk about is, a few weeks ago, we filed the proxy, right? It's kind of going through the SEC review period right now. We expect to get comments at some point in the near future. We'll respond to those, and then still on track to get this all wrapped up by the end of Q3. And, so that's kind of the timeline we're on right now.
And you're in Austin, Texas, which is notable because now you have a new neighbor. Elon Musk is your new neighbor. So what was your reaction when you heard that Tesla was opening a gigafactory in your neck of the woods?
Personally, I actually think it's a really positive thing, right? I think we've always viewed California as kind of the hub for electrification, right? And I think with this move from Tesla, it kind of positions Austin as being kind of another hub for electrified vehicles. And so from our standpoint, we're excited about it. We're excited to have more people focused on the same mission, the same goal in the area. And I think there's a lot of benefits of just building businesses here in Texas, and we're excited to be here and have others joining us.
And last one here, Thomas, an investment in Hyllion, is that like an investment? Is that a way to express a point of view in natural gas, electrification, all of the above, freight? How would you explain what an investment in your company, what point of view that expresses?
Yeah, it's an interesting question, and one that I think it expresses all those areas you spoke about, right? I mean, I wouldn't say it's just one, right? It's expressing an interest in this mega trend of moving towards electrification. It's expressing an interest in being able to have net carbon negative vehicles out on the road. So a huge advantage for the environment. I wouldn't say it's just focusing on one of those. It's kind of this global trend towards cleaner and more efficient and less cost solutions that can make a more economical shipment of goods across our country.
Thomas Healy is the founder and CEO of Hyllion. Thomas, thank you so much for the time today.
Thanks for having me on. Appreciate it.
Mark Russell, he is the president and CEO of Nikola Motors.
Morning.
I know it's early for you, so I appreciate you getting up early with us. I'm very sympathetic to that fact. Let's start off with the news from last week. You just broke ground on the new production plant in Arizona. Congratulations about that. What are the plans for that, and when will that be?
Well, we've started construction. Phase 1 will be done by next year in 2021. And then we'll finish phase 2 the following year, and phase 3 the following year. So the plant will be completed in all 3 phases by 2023. But we'll be up with the first phase and using that to do some limited production next year.
Speaking of production, I'm just curious. This is kind of a two-parter, but I'm curious how COVID has sort of impacted your production timelines. I was hoping you could talk about that and give us an update, if there is one, on whether you're still on pace for the previously given production estimates for the semis and also for the truck, the
Badger.
Yeah, the Badger. Thank you. Sorry, I blanked out there for a minute.
So the production timeline for the Nikola tray, which is the first vehicle that we'll have in production, coming out of Europe, which is where production would start first, out of our facility in Ulm, Germany. That has been affected by the virus. We had to shut that facility down in March, and then it came back up first part of June with some rules in place that limited productivity there. Everybody had to stay 2 meters apart and things like that.
Yeah.
So we lost some time there. What we're going to do is when it's clear that we're back to normal and we know exactly where we're going to be, we'll be able to announce what our start of production will be as moved to the right on the chart, because we were hoping to start production next summer, and we're probably going to have to move that to the right just a bit. I'm not sure how much, because the team is thrilled and excited and fired up. I was just actually was in Germany
Oh, wow.
a week ago, and at the facility, and reviewing everything and looking at the prototypes that are just coming together and about to go on the test track. The production prototypes, we have the first production prototypes coming off the line, and they'll go on the test track, here in the next 6 weeks or so. So I'll be back there in September to see the production prototypes track testing, and they're so fired up that a number of them have agreed to miss their holiday, their vacation. As most Europeans, especially Germans, do. They take August off.
Right.
A number of the people that are working for us there have said, we're canceling our holiday. What we were going to do it wasn't going to be as fun anyway, because half of it's closed. And so we'll cancel our holiday and work straight through and try to make up time, which it's just inspiring. The people that we have working for us, we have some new employees there who've come in to us as a startup, but most of the people working for us there are heritage Magirus/Iveco employees that were at that facility before, and they are so fired up about being part of Nikola and helping us in our attempt to change the world here, that they're acting with as much enthusiasm and fire as all of our other employees.
So Mark, you've said previously that you're gonna most likely have to raise more money. Is that still the plan, to increase production?
Yeah, it has always been the plan. What we raised this year so far, and we just finished our public listing by merging with a SPAC, which had a little over 200 million on hand, and then we did a private investment in that of over 500 million, and so we've got that cash on hand. There were warrants that were issued to the SPAC holders as part of the SPAC deal originally, 1-for-1. So there were about another 23 million shares that were warranted, and we'll have those called back in also, and that will raise us just over another 250 million. So our total fundraising this year is just under $1 billion. But that was planned to be enough to get us through this year and through all the activities next year. But by 2022, we'll need additional funds. That's outlined in our investor presentation on our website with our fundraising plans. Yeah.
Yep. So part of the challenge, obviously, is you need to start building these vehicles, these hydrogen fuel cell vehicles, but you also need to convince businesses, and you already have to some extent with Anheuser-Busch, but you need to convince these businesses in the long haul trucking industry to lease your vehicles. How do you convince them to do that?
Well, it's not very hard, really. Our proposition is a bundled lease, as you mentioned. We're not just selling trucks. On the fuel cell side, we're providing you with a truck that's powered by a hydrogen fuel cell. We're providing you with the fuel for that truck for 7 years or 700,000 miles, whichever comes first. And we're going to maintain it for you. So we take all of those worries away about, hey, will this thing work for me? Well, we're going to guarantee that. And can I find the fuel? Well, we're going to guarantee that as well. And we're going to give you a price that for most fleets, our target customers are dedicated fleets of mostly very large multinational corporations. And we're going to give you all that bundled lease, almost transportation as a service. If you've got a driver and a load, you're in business. Yeah. We're going to give you that at a price that's probably at or better than your current total cost of ownership for your diesel fleet. So their answer is, are you telling me that you're going to guarantee me that my total cost is no higher than diesel or about the same, and I'm going to be zero emissions? And we said yes, and they said sold.
But at the same time, the idea of hydrogen fuel was not a new one. People like Kathy would have done some estimates and some calculations, and they've estimated that the cost of building out the hydrogen charging infrastructure is dramatically more expensive than electric or other types of alternative energy. So how do you control those costs? Because it is expensive.
It is expensive. The way we do that, though, is, first of all, we've standardized the station design. We've been working on this for years with our partner NEL, which has been making hydrogen using electricity out of water for for many decades. They're experts at it, but they hadn't been building stations like this at scale and on a repeatable basis. So we worked together with them to come up with a standardized station. We built the first one here in the Western Hemisphere of this new design. The dispensing part is at our headquarters here in Phoenix. And the station is standardized. It's cookie cutter. You can build it, and it's modular. You can build any size of it in 8,000 kilograms a day of capacity increments. So 8 metric tons a day, 16 metric tons a day, 24, et cetera. And we've standardized that. We've got long-term supply agreements for all the components in place with the suppliers. And we have agreements to get that cost down to our target by the fifth station. By the fifth station, we should be at our target cost, and then be able to drive it down further from there as we continue to take cost out of the system. Now, that's just the capital cost of the station. The real cost of making hydrogen out of electricity is the electricity.
Right.
So that's actually the most important part of this, is to make sure that you can get renewable electricity as much as possible at the location where you're making the hydrogen.
So you can understand why a lot of people are skeptical, because as cool as the designs and the prototypes, as cool as they look, you haven't actually produced anything yet. And yet, the stocks, we know stocks have the mind of their own, but the stock has just like blown right past where you are right now. So how do you sort of what do you say to that? Because the expectations and the reality seem to be at different stages right now.
The reason I think that we've gotten such a positive response from the capital market is because our plan is so bold, and it is so detailed. If you have a chance to dig into what we're doing, we have a detailed plan. And unlike some companies in the space, we have partnered with world-class companies to help de-risk and give us the resources to accomplish this. We have a partnership strategy. We're trying to build an ecosystem here, because what we're trying to do is breathtakingly ambitious. I mean, it is. You're right. You should be skeptical before you look into the details, because what we're trying to do is disrupt the fossil fuel heavy transportation industry and the fossil fuel industry at the same time, right? How audacious is that? And that's why from the beginning we've said we need help, and so we've engaged partners, companies like Bosch. I mentioned Nell, Wabco, Meritor, Case New Holland, Iveco. These are the kind of companies, world-class companies that we have partnered with to de-risk this strategy and bring resources to bear. We're going to continue to do that. We'll continue to be open to partnerships to help us be able to execute on this plan. It's really audacious. We understand that, but we believe we can do it. And enough of the market believes we can do it so far that we can raise the capital we need.
We're on the line with Mark Russell. He's president and chief executive officer of Nikola Corporation. Mark, just kind of like a broad question here, and you talked about help, and obviously you need to step up the production of the trucks to be able to sell them, to be able to make money. I mean, I'm a firm believer, in the next, 2, 3, 5, 10 years, there's just going to be a lot less cars on the road. For a variety of reasons. I mean, COVID has already, really decreased the traffic. I think people that work from home. What's the car company landscape going to look like in 5 years? I look at NIO and Volkswagen, Ferrari, GM, Ford, Fiat Chrysler, Tesla, Solar, Nikola, Workhorse. I mean, not all these companies can survive. What is there just going to be? Is everyone just going to be driving a Tesla and then maybe driving your truck? Where do you see the consolidation? And if you guys are having production problems, why aren't you reaching out to some of these, bigger car companies that, have idle facilities that you could perhaps transition your trucks over to?
Well, remember, we're going after two markets. We're going after the heavy truck market primarily. Our foray into the passenger car market, which is the Badger, which is a full-size pickup truck powered by a battery or a fuel cell. Those are two different markets. And you said that there's going to be a lot less cars on the road. I think that's not true for heavy trucks. If you look at the trend for commercial transportation, that's only been growing. People call it the Amazon effect, but the amount of freight that's on the roads is not going down, and I don't think it will go down in the foreseeable future, because the old, distribution supply chain for retail in the world is being massively disrupted right now and being replaced by direct-to-consumer model, the Amazon kind of model, which actually requires more commercial transportation on the road. So that I don't think is going to shrink. I think that even if you can get to autonomous driving, which is not here yet, of course, but even if you get to autonomous driving, I don't think you're going to see less commercial transportation on the road. I think it may actually grow. But on the passenger car front, you do see a huge proliferation of the number of people playing here. The OEMs are trying to reinvent themselves, and then you got the new players like us coming in saying, we're going to give this a fresh start. There's going to be a shakeout, no question about it. It's going to be highly competitive. There'll be a shakeout. Conditions now are very similar to where they were early in the last century, when the transition from horses was into internal combustion, and Henry Ford and the Model T, and all the competitors that sprung up. I was working out of Ohio for the last 12 years before I joined Nikola full time. And there's a city in Ohio where there were once, I think, like a dozen car manufacturers, and you wouldn't recognize any of the names because they all were they either went out of business or they were merged into and consolidated into what became the big three.
Right.
So yeah, I think you're going to see a similar process that plays out here. I don't know how long it's going to take, but it'll be a similar process, and you'll have a consolidation of the winners.
Mark, your founder, Trevor Milton, said that you had been receiving 1,500 reservations a day for the Badger. Is that number still accurate? Is that still the case?
I have not seen the most recent reservations for the Badger, and remember, our approach on the Badger is different. Most people taking reservations for a vehicle are taking just $100 from people on a refundable basis. And when we first showed the concept of the Badger, we took just reservations without a deposit. That's what our model has been for years.
Right.
And we had a lot of those. And then when we announced that we were actually going to build it, we'll do this going forward also with truck reservations. Our next truck reservation will be with deposits, and we'll take deposits from now on, because we're close enough to production that we think that's warranted. But we have a $5,000 reservation for the Badger. We have a $1,000 reservation, and we have a $250 reservation. So those are really hard reservations. People aren't just playing around if they put $5,000 down. And we basically got sold out of those pretty quick, and now we're filling up the 1,000 and the 250 slots. So I haven't seen the most recent ones, but we expect those to go up as we get closer to our Nikola World event in December, if we're able to hold it in this COVID time. And when we actually show the truck, we're going to show working prototypes that are completely production intent.
So without any sales and without earnings, how do you recommend investors or anyone value Nikola right now? Because it's tough.
It is tough unless you're looking at the long term, and that's what I'm looking for, is investors who want to buy into our long term vision and are willing to buy us and hold us. I think it's really tough to value it on the short term unless you're speculating and day trading it. And then
that's a different game entirely.
And it is a different game entirely. So we're looking for people who want to buy and hold us, and see if we can do what we say we'll do. See if we can build these trucks, get them on the road, see if we can build charging and hydrogen dispensing stations and get them going, and see if we can build that Badger, and how the market receives it.
And just to confirm, you've got your earnings call next a week from today, actually, right? Next Tuesday?
On the 4th, yeah.
Right. And then as of now, Nikola the World is still going to happen, though who knows what December, what happened before December in 2020. But just to confirm that it's still the plan to happen.
It is.
Okay.
We're still trying to have it, just like everything else in life right now.
Right. Exactly.
You'd like to plan, but things are so crazy with this.
Yeah. All right. Mark Russell, as we mentioned, is the president and CEO of Nikola Corporation. Mark, like I said, I know it's early. I appreciate you waking up with us, and thanks a lot, and stay safe out there, because these are crazy times.
Thanks for having me on. Appreciate it very much.
All Our listeners asked and we delivered. We are joined now by the CFO of Workhorse, Steve Schrader. Thanks for joining us this morning.
Thanks for having me on, guys.
Well, what I was gonna say before Joel interrupted me, or Dennis interrupted me a few minutes ago, but I was gonna say, everyone hit the like button if you want Steve to spend this time trying to convince Joel to move to the great state of Ohio, but that's not gonna happen probably. Steve, for our listeners who aren't aware, explain the opportunity in last mile delivery, because that's essentially the sandbox that you play in.
Yeah. So last mile delivery, think of kind of UPS, DHL, FedEx, kind of the big trucks, the 1,000 cubic feet trucks. But also think of kind of also like what Amazon uses, like the Mercedes Sprinter, the Ram ProMaster, the Ford Transit that you see in the neighborhoods too. So that combined market replaces vehicles to the tune of like 300,000 a year, and it's an $18 billion market. So although sometimes that market isn't sexy enough for the big players, it's certainly sexy enough for us and a big market for us to get a share of our market share.
So, Steve, we solicited questions from our listeners and from our chats, and pretty much the only thing on everyone's mind is the outcome of this U.S. Postal Service contract that we're waiting for. Do you have any insight as to when you may hear about that?
So I can't say too much about that, unfortunately, for your listeners. What I can say, though, is what's public. So the post office in the March time period of spring of 2019 had 6 companies go through prototype and durability testing. We were one of those companies. We were the only all-electric option. And we were also one of the 3 American companies that went through the prototype testing. And they issued a RFP in December, late December, and the submissions were due July 14th, so last Tuesday. That's about all I can say. What I will say is our all-electric, though, is probably the perfect vehicle for them. So when you think about what the post office does, 70% of their trucks go about 17, 18 miles a day and make 700 stops, mailbox, mailbox, mailbox. So ours runs almost like a golf cart. So that's really more what you need. Right now, they get 5 to 6 miles per gallon. Ours get over 40 miles per gallon equivalent. And we have half the maintenance costs, which is really what's killing the post office right now, because we have no transmission and about 1/3 of the components. So we'll see what the post office does.
This contract, I think, could represent as much as $6 billion in value. Fair to say that it's the biggest catalyst for the business right now?
Well, I mean, I think it's a great opportunity for us. So obviously, if we were to get the full award or a decent size award, that would be transforming for the company. But from the standpoint of our current business, we like that as well. So we currently have our C series, which is C1000, C650, and C450, and those are all cubic feet sizes. So those are what competes. So the C1000 would compete with the big trucks you see right now of UPS, FedEx, and the C40 and 450 and 650 would compete with the Mercedes Sprinter and the ones I talked about earlier. So we think those all compete. We think right now we're the only electric vehicle option in that delivery market. We are actually making trucks right now at our Union City, Indiana plant. And we plan to make 300 to 400 this year. Most of those will be at the very end of the year and the last quarter. And we also have a back order of 1,100 vehicles. So we already got sales out there and orders from UPS and DHL. In addition to that, we own 10% of Lordstown Motor Corporation, which I think you're probably at least familiar with their endurance unveiling that Vice President Pence was at as well. So, and we have a drone that is patented and comes right off the top of the truck. So I think we have a lot actually going for us, even if we didn't get the post office.
Steve, Dennis Dick here. Let's talk about the drone delivery. Where do you see this industry going? Because we hear about this, that drones are eventually going to be bringing us their stuff, but we don't see any of them really happening yet. Do you see the whole industry, the delivery industry, moving into drones as a more efficient way, or is this just going to be, something, that, may, not come to fruition?
I would probably say that was, Dennis, the same opinion we probably had even last year. I think we thought the drone was a way to sell more trucks. And what happened was the virus. Right. So the interest in our drone that comes right off the truck and doing touchless delivery has just taken off exponentially. And so from our standpoint, we actually went down to Virginia, and in front of administration and governmental officials in April, we, along with another company called Drone Up, ran about 50 missions. And what they wanted to see, how does that interact from a standpoint of and can be used for medical and emergency supplies. And for example, Drone Up had 3 people on the ground running theirs. Ours autonomously through software came right off the top of the truck, dropped the package, and came back to the truck. So I think the interest even cranked up from there as well too. So now, if you want to do something commercially from a standpoint long-term with drones, or be a drone OEM, which I think is a possibility now and actually a legitimate business case that could rival a truck, you would need to get certifications from the FAA. And you need to get a type certification and a production certification. And those certifications take about 12 to 18 months. So I think even the FAA understands that, they want safety first for sure. But from that standpoint, I think it's a real opportunity. I think it's more like 2 years away versus 5 years away.
The drone business, is that in California, or because I know you've got some different you're based in Cincinnati, but you're I'm trying to phrase my question correctly here, but I guess, is there any advantage to the drone delivery business being in California?
I'm not aware of any advantage right now that there's any unique laws in California or not, but we are based in Loveland, Ohio, and we've already run missions. We've done for about 4 or 5 years. We've run different missions here in Loveland and with different parties. So again, on a short-term basis, you're allowed to do that and get exceptions from the FAA. It's more if you want to really make this a commercial long-term business.
You mentioned Lordstown Motors. You've got a 10% stake. Any plans that you can say to do anything with that, maybe buy more, or just talk about like the stake in Lordstown Motors and kind of what they're doing?
Yeah, I mean, they're a private company, but they've been pretty public with what they're doing from a standpoint of their product. So they've made the endurance pickup truck. I think they're trying to appeal more to fleets rather than maybe the commercial market necessarily. I thought they said that by sometime next year, they're going to have them ready to go. Yeah, we have a 10% stake. It's non-dilutive. They also have the GM Lordstown plant, which is a 6 million square foot plant. So we talked about our own Union City facility from a standpoint of ours is 250,000 square feet, and it could handle, if we got a post office award and what we're trying to do. But you also have as an owner in like Lordstown, an option possibly, and maybe to subcontract if it's, if it increase your margins and maybe not spend capital at Lordstown or at Union City, to maybe use Lordstown as a subcontractor since it's such a big facility and already kind of ready to go.
Just as far as just the last mile delivery competitive landscape, 2 of your biggest customers, as you mentioned, UPS and DHL. Of course, you're trying to work with the U.S. Postal Service, but I guess like talk about that landscape and sort of just who you're going, who are your main competitors, who do you see as a big threat right now?
Right now, we don't have a competitor. I think it's just us that is out there of all the certifications from a standpoint of we can sell in all 50 states, and from a standpoint of we are actually producing and making them and we'll be delivering this year. I think at different competitors, for example, that could be competitors like Rivian has thrown out that they're going to make a delivery van. But I think first they're making trucks, and I think they're 2 or 3 years away from making a delivery van. So we kind of like our opportunity here that we got a 2 to 3 year head start on everybody. And we kind of understand and work with all these customers, understand the duty cycle. The potential customers, you talked about DHL and UPS, which you already have sales orders for, but there's also, there's FedEx, we're working with Ryder right now, because Ryder already has a lot of these customers that maybe not as big as the UPS or the FedEx, and maybe don't need a C1000, but want smaller vans and trucks that we make. And they can accumulate 25 or 50 or 75 orders, and they can also do the maintenance for their customers. So we think that's a great relationship. And we're talking to everybody you would think of from a standpoint. I think their biggest question is it's not so much actually sales and getting orders. It is actually, I think they're just waiting to kind of say, how soon can we get them?
We're on the line with Steve Schrader, the Chief Financial Officer for Workhorse. Steve, let me zoom out here, and obviously the craze with electric vehicles. Give us your perspective on the car industry 5 years from now. You have Tesla, NIO, Ford, GM, Fiat Chrysler, Ferrari, the European companies. Do you see some sort of overall consolidation as more ride sharing and less cars are needed, and or do you see any bankruptcies in the sector?
I don't know about bankruptcies. And what I will tell you is it seems like when you talk about the cars too, is because that's not our market. But it seems like there's always consolidation when there's an interest like this. So I can see that being a possibility. I think because there's so much competition there as well, everybody wants to either do the pickup truck or the automobile, right? And the EVs are hot. I think because those are the sexy areas, there's competition. I guess we like where we're at from a standpoint is not a lot of competition in the last mile delivery, but they also want EVs too. A lot of the fleets have a goal to kind of have 30 or 40% of their new orders be EVs going forward. And that actually, even though it's like I said, it's not the hot area and hot market, that is the fastest growing market. It grows about 15% a year and replaces 300,000 vehicles. So we're kind of just happy to be in that market.
Steve, Workhorse has been public now for a decade, actually. So how do you explain the enthusiasm in the stock that wasn't there 2 months ago?
I think it was when I was hired.
Good answer.
I think honestly is what has happened is we certainly got caught up in the EV interest. And from my standpoint, I think from relative comparison, I think is where it really kind of came out. So here's, from a standpoint of, let's look at Nikola, so Nikola's taken off and it's a multi-billion-dollar company, and still it's probably 2 years away from making anything, right? And I think what investors have done, and again, you guys are the experts more on valuation than I am, but I think what the investors have done is at least looked at little Workhorse here and said, look, not only are they making vehicles right now, they already have orders. In addition to that, they have a drone and they have an opportunity with the post office. And I think relative comparison and just to being $1.5 billion company, I think we look pretty well.
Steve, one more question. What happens if, say, hypothetically, you don't get the post office contract? You've talked about some of your other businesses. Where obviously is your focus going to go to then?
I think it's on the C series and the drone. I think again, the post office to me, I always refer to as the cake on the icing because it's so big.
Yeah.
But from a standpoint of the actual business, what I'll call is non-post office business, we think is great. We think we like our place in it. We like how big that market is, and just getting a bit, even a portion of that market share of an $18 billion market is quite a bit of opportunity for us. In addition to the drone, like I said, could be its own business case by itself. So I think we like where we're at and we like our position. Even if we didn't get the post office, we'd certainly welcome the post office opportunity as well.
I just want to repeat what you said earlier. You're still on track, you said, to deliver 300 to 400 vans this year. Have you announced your upcoming earnings date, or can we get some, is that public information yet?
We haven't yet. We probably will do that in next week or so.
Okay. This is for the June quarter, right? Yeah. Okay.
The June quarter, really be in early August sometime.
Early August. Okay. And what was I had one more question for you, and now it just kind of lost my mind here. But I think maybe Dennis kind of asked my question, which is just what you would do hypothetically in light of using the USPS contract. But I guess to wrap it up here, Steve, best case, worst case, where's the company in 2 years?
Oh, in 2 years, best case, I guess we get the post office contract. We also have a lot more orders, and we're producing to the tune of maybe 2,000 to 3,000 vehicles a year in the C series. And best case from a standpoint of the drone is actually maybe we've got certification, FAA certification, and it's a legitimate maybe drone OEM business. Worst case, I guess, is we don't do any of those things, right? I mean, the worst case, but I don't see that happening. I just see we got a great management team here, and I think we've just positioned ourselves really well, and we're looking forward to kind of going forward.
Steve Schrader is the Chief Financial Officer of Workhorse. Steve, we thank you for the time today, and stay safe out there. Crazy time.
Thanks, guys. Thanks for having me.
Thanks, Steve.
Let's go to our guest here. We're joined now by Andy Marsh. He is the president and CEO of Plug Power Inc., that trades on the NASDAQ under the symbol PLUG. Andy, good morning.
Good morning, Joel. Good morning, Dennis. Nice to be
Andy.
here today. Hey, how you doing, guys?
We're doing well.
We're doing all right.
That's good.
We're doing all
Hi,
right.
Spencer.
How's it going?
Okay.
Andy, I want to start off asking you real quick because hydrogen fuel energy is not it's not a new thing, but it's newer. So explain to us exactly just how far along the industry and technology is right now.
Sure. Spencer, it reminds me of, I started long time ago in 1982 in the wireless industry. And, wireless cell phones didn't take off to 94, 95. Plug Power's been around doing this for 20 years. When I came, the technology was about ready. And then we turned it into products with people like Amazon and Walmart, who I heard you just mention. We actually delivered 25% of the food, retail food that Walmart delivered during the COVID crisis. So it's much further along than people think. And, it's projected to be a huge market by people like McKinsey long term, because it does help solve many of the challenges people are facing with the climate.
So let's talk about that. What exactly are the advantages or maybe even disadvantages of this technology over another alternative energy like electric vehicles, for example?
Sure. Well, I think you got to start with a premise that the world's going electric. I mean, when I look at the world, electric motors are lower cost and simpler than internal combustion engines. Then I think it's a question of how do you power that? And if you're looking at commercial vehicles where range is important, you can get twice the range with fuel cells versus batteries. If you think about issues like power densities, so you have 2 to 3 times more energy density with fuel cells versus batteries. And the fact you can fuel in 10 minutes. So that's why people are thinking about fuel cells for fleets. And by 2030, once the world's different, and you start having a sharing economy and you have an asset that can always be on the road, I think many, many personal vehicles will be fuel cell powers in the 2030s.
That was my next question, because right now it's really more of a being used for commercial use, right? It's being
right. I mean, we have 30,000 units. Our primary business is in forklift trucks today. We have 30,000 units running with people. People you were just mentioning, Amazon and Walmart. Those packages being delivered to your home are being touched by Plug Power's fuel cells and hydrogen every day. But it's also well beyond that, into on-road vehicles, into backup power systems for data centers. I mean, the range of opportunities for fuel cells are kind of endless. That's why McKinsey believes that eventually this is a $2.5 trillion market opportunity.
Can you explain your company a little bit? Because you guys have made a concerted effort over the past year or so to become vertically integrated. So I was hoping you could just explain exactly, because you've made a couple of transactions and kind of changed the structure. So explain to us the state of the company right now.
Sure, Spencer. Well, it's been a ride. About 10, 12 years ago, the company really was a system integrator. And we found out when I look at our stories, I've read the story about SpaceX, about how Musk decided he had to become vertically integrated to provide the cost as well as the quality level customers required. And that drove us into building and designing our own stacks. We're the largest manufacturer of MEAs for fuel cells today in North America, which is the key critical component. About 7 years ago, Walmart said to me, "We're not going to buy anything unless you provide a complete system." And we've built over 85 hydrogen stations. We're the largest user of hydrogen as a fuel in the world. And when we look at our business, we made the purchases of United Hydrogen as well as Giner ELX to provide us the opportunities to provide green hydrogen for our customers.
Here's a question from our chat here.
Yes.
He's asking about the current cost per mile for your tech compared to conventional gas.
Yeah. So when, you know, if you look at it, you have to think about it a little bit differently. It's probably today versus natural gas, you know, 20% higher. But when you start looking at roadmaps where the cost of hydrogen is going, today hydrogen's about 2x higher than it will be in 2030. Because the price of hydrogen ultimately is tied to the price of renewable energy. And, you know, when you start looking at, you know, we're looking at hydro plants where you can buy hydrogen for 3 cents a kilowatt hour. And at those kind of levels, hydrogen is competitive with with natural gas, and especially when you go beyond the United States, obviously where natural gas is quite higher.
We're on the line with Andy Marsh. He's the president and CEO of Plug Power. The ticker is PLUG on the NASDAQ. Andy, how do you explain just the dramatic rally in your stock over the past few weeks? Like you said, Plug Power has been around for a little bit here. So like, how do you explain the fact that it's just blasted off here?
Well, Spencer, if you've been doing this as long as I've been doing it, doesn't feel like a blast off. But
Yeah.
but when you look at the world, if I think about, we've built first a fundamentally strong business. You know, we'll do 300 million revenue this year, 20 million in EBITDAs. But I kind of, Amazon is probably my biggest customer, and how do you value a revolution? I think, Jeff Bezos once said. And I think when you start thinking about where hydrogen's going, where it's going to be part of everybody's everyday life, there's a McKinsey study which was paid for by a lot of people in this industry, but they're projecting it's 2.5 trillion, and it's going to touch every part of everyone's life, from mobility, from providing heat for homes, for industrial processes. And I think people are just beginning. And, it's more than just, retail investors. The institutional interest in the company, in the sector, have never been higher. I was at a recent conference like this on the phone in London, and, we were sold out. We had 52 institutional investors who wanted to speak with us. And instead of having one-on-ones, I ended up having 3-on-1s for 2 days for 40 minutes each. That's over and over again because institutional interest was so high. And I think it's because they see the potential of the sector.
What should any investor, either in the space or in your company specifically, what upcoming catalysts do they need to be aware of?
Yeah, I think first, I think if you go back and look over the last 3-4 years, Plug has done what it's said it's going to do. And that, this year, we're going to again increase our revenue to by 35%. We're on track to be $1.2 billion in 2024. And I'm looking at a couple key catalysts. One is, I think we'll be putting vehicles on the road in the second half of the year, which we think will excite investors. I think our deployments and expansion to green hydrogen, which we think is the key to expanding this market, since customers are actually demanding a cleaner footprint. It's really just not the government's. And, I think that you'll see activities in large-scale backup power. So I think you'll see 2 or 3 announcements where people say, wow, that's significant for the growth of Plug Power long-term, and aligns with the 5-year plan we rolled out.
Joel, you're on mute there. The old mute trick for, hold on. There we go.
We're on the line with Andy Marsh, president and CEO of Plug Power. Andy, 2-part question here for you. Can you break down your company's earnings by, yeah, you've mentioned, the car sector, you've mentioned some other sectors. Can you break down the percentage of your earnings coming from the different sectors and where you anticipate the most growth to come from?
Sure. So today, about 20% of our revenue comes from hydrogen, and about 80% comes from our fuel cell and hydrogen infrastructure business. They actually go tandem, Joe. By 20, if I look at this year, you'll see revenues of approximately $60 million for hydrogen, $60 million for service, and $180 million for fuel cells, primarily providing fuel cells for forklift trucks. I think by 2024, what you're going to see is that our revenues will be about $750 million in our traditional market material handling, $250 million in $200 million in backup power and backup power and on-road vehicles, and the remainder on hydrogen. So hydrogen becomes a big growth opportunity for Plug Power.
Okay, and this is I get a lot of flack on this from the chat, from Dennis and Jason and Spencer and everybody. And I look at the car industry, and I look at Tesla and Ford and GM, and to me, and Uber and Lyft and however you want to throw it into, I see over the next 5 to 10 years a lot less cars on the road, a lot less people driving. So is that, first of all, do you share that perception? And secondly, how does that affect your business models?
So first, you're in Detroit. I would think everybody's for cars in Detroit.
I didn't say I'm not for cars.
That's why he takes the heat. That's why we give him the heat. We got to defend the D. They're going to kick him out of the Detroit for saying stuff like that.
So I got to say, I agree with you, Joel. And I think that, and I also think it's a function of where you live. I think if, I live up in Saratoga Springs, New York, where I need a car.
Saratoga. Do you go to Saratoga?
I do.
Driver's stakes?
I'm a mile. I can walk to the track.
You're my friend.
So when I think about it, I think if you're living in urban areas, that using drive share is really, I think, the primary way people are getting around in cities like New York today, and it'll expand into other areas. I don't think the majority of vehicles will be ride share, but I think a great deal of vehicles will be. For the fuel cell industry, I think it has a great deal of value, because when you think about ride share vehicles, especially automatic guided vehicles, take us to 2033. Those vehicles you're going to want on the road all the time, and batteries you'll have to take off to charge. Fuel cells, you'll be able to fill them up 10 times faster, have that asset back on the road, and get twice the range. So, the value of fuel cells in a sharing economy starts really showing its benefits. You also can have centralized fueling, which again really cuts down the cost of deploying fuel cell vehicles.
Andy, one more before we let you run.
Yeah.
But, how do you get over the cost of installing all these stations? It's not cheap.
Yeah. First, our stations are actually, so I think it's really, Spencer, why I started in material handling and why I think commercial vehicles are the first to take off. Because the price the price to build a fueling station versus building a battery room for a distribution center are about equal. So what the issue is with fuel cells often is what comes first, the vehicle or the stations. We built them both together. And that's what you can do with commercial applications and fleets. And that's really why fuel cells, I think, have a strong position, including the fact you have twice the range. You can fill them fast. It really just how you use the assets really, really gets demonstrated in those kind of applications. So quite honestly, Spencer, you got to pick the right app at the right time to make sure the cost of fueling is competitive. So, you go to Amazon distribution center, our station still is pushing as much hydrogen a day as your local gas station.
I lied. Here's one more from the chat. Someone has done their research here, and they know that you signed a deal last year with Street Scooter to produce 100 delivery trucks for DHL. Just any comment on that partnership and how you're going to keep leveraging it?
Sure. Your listener did pay attention.
Yeah.
But actually DHL owns Street Scooter, and they decide to disband that organization. So unfortunately, I won't be doing those deployments in the next few years. But that being said, we're actually doing a great deal with DHL on other applications. I heard mention also delivery. We've been working with DHL to put fuel cells at airports to support their fleets for both their forklift trucks and their ground support equipment.
All right, Andy Marsh is the president and CEO of Plug Power, and he's also Joel's new best friend. And appreciate you coming on with us this morning, and stay safe out there.
Okay, pleasure to meet you all. Thank you for giving me the time today. Bye now.
ElectraMeccanica, ticker SHLL. Guys, first off, you tried to sneak this by me this morning, but I did see a press release about 20 minutes ago, maybe a half hour ago, that you're opening a new retail location in Portland. Is that right?
Yeah, so we just announced that we're starting another little retail location in the Portland, Oregon area, not downtown Portland, about 18 miles outside of Portland in one of their prominent suburbs.
Paint the picture for us. That brings your locations, because I know you've got locations in Arizona and California, LA. You're planning San Francisco, I believe. So can you outline where you have locations right now?
Yeah, so we've been very methodical where we started, right? So we launched in Century City first at the end of last year, around the Thanksgiving time period, right over Black Friday and into the holidays. And we did that with Westfield first, and then we started to build out with them. And our goal is to do Southern California first, and then we announced that we would expand it to Arizona and then to Oregon. We did Scottsdale Fashion Square with Macerich. That's a Macerich owned property there. And these are little retail kind of pop-up kiosk storefronts. And now we've just announced that we'll open up on September 1st up there in Portland, which is at their Washington Square location.
So for those who aren't following this company or this story, ElectraMeccanica focused on, I guess the core mission was single occupancy vehicles, electric vehicles meant for the commuter crowd. Obviously, the last few months have changed everyone's working habits. So how has the past few months and this what seems like is some kind of a shift to work from home, how is that impacting the way you see things?
Yeah, well, at the beginning, this was all meant when the vehicle was first conceived. You're right; it was all about single occupant vehicles for commuters, right? But then as time went on, and when Bal and I came into the company, we really saw an opportunity to take this vehicle into other applications as well, into fleets and utility applications and into rideshare, right? Because the reality is there's so many single occupant applications. For example, when you think about delivery applications for pizza, when you think about even like security guards to go around and monitor parking lots at night, or if you think about how many police forces, there's one occupant in the vehicle going around in the cities and things like that, right? So we're going to come out with a utility version of the vehicle as well, right? This is an all-electric vehicle that has a 100-mile range, right? It has an 80-mile-per-hour top speed, right? Front and rear crumple zones, side impact protection on the vehicle, torque limiting, stability control, all of the same comfort features that you're accustomed to. And then when you think about the rideshare aspects too, the ability to share these vehicles and go from one point to another point, it's really exciting. But what makes the vehicle super, super unique is, especially as we emerge from the pandemic, people are afraid to take mass transit right now. People are afraid to get into Ubers right now. People are afraid to really get into any other space where there's other people right now, as you can picture, right? So this is a very, very self-contained environment where you're alone. The only germs in the vehicle are your own germs. And then when you think about that fleet application, just going back to that for 1 second, when you think about any kind of food delivery, where they've spent so much time putting the effort into getting that food cooked and prepared in a sanitary space, in a sanitary environment, and now they're trying to make sure it's delivered that same way. This is the perfect vehicle for that.
Well, can you? I'm trying to avoid my own germs. That's the problem. So I'm not to solve that. I want to bring Val on now. Val, you've been talking about the transition you're making this summer, really, from pre-production to production. Talk about that. Where are you on the timeline? Is production ramping up? Talk about that.
Yeah, thank you very much for having us on your show. In terms of where the company is, we're currently in pre-production. This summer, we will be transitioning into a production company. It's a dynamic shift for the company. It's something that started as a vision and a dream in 2015, and now we're going to be able to make it into reality. So we're really excited about where we are right now, and we're just about to turn that corner in the next little while, and that's just an exciting time for us as a company, as an organization, as an executive team, and as everyone that's worked so hard to get to where we are. It's going to be a big momentum shift in terms of where we are going to be, going into production and then going into revenue.
So like later this summer, as in like July, later August, basically?
In the very near future.
Okay.
Yes.
How does that impact things like your cash position and maybe need to raise money? Because going from one stage to the other is a big shift. So talk about that.
Well, we during the past few months, we've really been able to de-risk our balance sheet. Right now, we have over $51 million cash in the bank. So we've really worked very hard from a strategic operational level, as Paul has alluded to, and he'll be able to talk a little bit more about the solo ecosystem as well. And also from the financial side, and being very strategic in how we carry out our plans to make sure that we have a very succinct pathway to success. We're looking towards the next 12 to 18 months, and we're strategizing in terms of what we're doing. So, the big thing was making sure that we have de-risked the company financially from the balance sheet to make sure that we don't have roadblocks when it comes to the financial aspect.
So when do you see ElectraMeccanica being at full production capacity? How far off is that?
We won't be there for a little while. We have capability of producing up to 20,000 vehicles per year out of the facility in China. And just the way Bal and I have planned the production right now, we want to be very, very careful. It was all about first getting the engineering right. We've gone through great lengths to make sure that we've done that. And we'll launch, like I said, methodically first on the West Coast, make sure that not only engineering was right, but the customer engagement model is right in our retail footprint, because our retail footprint is very unique. It's just a pop-up retail location. So we don't have big, heavy brick and mortar storefront kind of approach, right? It's an incomparable vehicle with an incomparable launch strategy and a very asset-light production strategy, but it's all about getting it right in a very slow, methodical ramp up. So we have the capability to produce 20,000 vehicles per year, but it'll be very, very slow, methodical in the first year.
A couple questions about production here. You've got production facilities mainly in China, but also in Canada. You've outsourced your production in China. I guess that was by design, but are you concerned a little bit about just the escalating tensions between the U.S. and China?
Yes.
And because that is where you have your production. Yeah,
we have one production facility right now. It's an asset-light production facility. We have a production partner called Zhongshan Industries, massive partner, and we've leveraged them. They make about 3 million motorcycles per year, and they're based in Chongqing, right? And they have 400 acres under roof and 50-ish joint ventures around the world. But what we are doing is we're looking for a U.S. assembly operation. So we started with our partner BDO. We've looked at, we started with 7 states, and we've narrowed the search down to 4 states. We've looked at land and facilities in Arizona. Next week, I head to Florida and to Tennessee and meet officials in both of those states as well to continue the search. But the whole idea is we'll bring kits in from China, and we'll use a global supply chain to de-risk and to mitigate the tariffs from overseas. We'll tap into a U.S. supply of talent, and go after the largest EV market in the world. So of course, we're very, very focused on bringing down our cost of the bill of material, first of all, but secondly, mitigating against those risks between Xi and Trump.
I also saw Colorado and North Carolina on those lists.
Colorado was eliminated 2 weeks ago, but North Carolina is still in the running.
Is there an estimated timeline on when you might have a decision on that?
Yeah, so we'll announce who the finalists are in the next few weeks, and then we'll announce the final state probably around Thanksgiving time period and start construction right after the beginning of the year, with the goal to be open by the end of 2021.
All right, I'll ask this question to Bal, getting some questions from our chat here. Who are your competitors? Because it's not quite other single occupancy, like I hear single occupancy, I think like motorcycles, and I think like scooters, and it's not quite that. So like, who are your competitors, if they even exist? I don't know.
Yeah, we don't really have a true competitor because the Solo is so unique. It's so trendy. I mean, as Paul alluded to, the test that we've done on the vehicle, it's 3 wheels, but when you sit in it, it feels like you're in a cockpit. I mean, you've got all the perks that you have in just a regular 4-wheel vehicle. So we don't really have a true competitor. We're very niche. We've created a niche market called Solo Drive. And with Solo Drive comes with the Solo Share. It'll have the Solo Utility, which is commercial fleet. So we've really tried to create a big ecosystem that's all around the Solo market. And it's very different from what you're going to be able to do, because 76% of the people are actually driving by themselves. There's so many applications, as Paul was alluding to, on the commercial and the delivery side, whether it be pharmaceuticals, whether it be food, whether it be packages, whether it be for tech campuses or universities. There's so many different applications of that. So because it's so unique and different, it really is in a category of its own, and that's what we've really created. I mean, there are other vehicles out there, but they don't really compare to what we actually do and what we're actually trying to create. And as Paul has alluded to, and as an executive team, we're really focused on making sure that this market, this niche market that we've created, really expands through the rest of the global transportation industry, because we've really disrupted that.
How do you convince people on what is essentially a new form of transportation, right? There are no single occupancy cars out there, at least to my knowledge. So how do you convince people to buy this sort of thing,
Well, there's 2 aspects. One is the commercial and the fleet and the utility side, and then the other aspect is the commuter. So it seems like you're talking about the urban commuter right now. And if you sit in this car and you take it out, it is a magnet. I mean, it is a magnet. I mean, absolutely. The car goes out and people come in herds around it. I mean, all sorts of people. So I don't think our challenge is going to be on the sales side. It's basically what people are realizing, that the purpose, it's purpose built for what we really need to do.
Yeah, I think Spencer,
it's minimalist.
Just to add to what Bal is saying, I've been involved in some of the most exciting vehicle programs around, right? Because of my background in the automotive space, working for technical consultancy prior to this role. And I'll tell you, when I drive my Solo around, whether it's to go get groceries or go get a bagel somewhere, it just attracts people, right? And when they find out that it's at a price point that they can afford, You have everybody, it's a typography, right? It's the people who are early adopters in technology, typically the same people that like to go after iPhones and Galaxies and want to be first, that are eco-friendly and that are probably minimalists, that realize that, hey, this is what I need to go to do my shopping and go to the gym and go get my bagels. And this is perfect. This is really a really cool vehicle, fun and exciting to drive. It's a really unique vehicle when it comes to the consumer side. And for the fleet applications, it speaks for itself. It's just, for utility and fleet, it's just a really, really cool product. And just it suits a need, and it's in a space all by itself between micromobility and passenger car. And again, we think we're going to kill it.
We're on with Paul Rivera and Bhular, who are the CEO and CFO respectively of ElectraMeccanica. Do you have guidance as far as production for this year or deliveries for this year?
Currently, we're not providing guidance at this point in time, but eventually we will be providing guidance.
And then how do you guys explain the recent dramatic rise in your stock as sort of the entire electric vehicle trade has kind of come to the forefront over the past couple weeks or couple months? I mean, obviously you don't control that, but how do you explain that?
I think that this, well, first of all, as I was listening to you gentlemen talk right before we hopped on the call with you, right? The space is high. First of all, the space is just high, and you see what's happening with Nikola and Tesla, Workhorse. The space is hot to begin with, right? But I think that in our case specifically, I think people who have been following us, they know that we're about to go into production. I think that Bal's point about going from pre-production to production is a big one. So I think that they know that we're about to go into production. I think also they recognize that we're expanding our retail footprint. So that's a big one. I think that they recognize that as we emerge from the pandemic, we have something unique to offer. And it's a really fun, exciting, trendy vehicle that looks very, very different and offers people the opportunity to go and be in a self-contained environment. So I just think that there's lots of compelling reasons why this vehicle and our stock should be exciting right now. This is exciting. And when you think about the ecosystem, when you think about the 19-year-old kid or the 18-year-old kid who would be driving one of these vehicles to make a delivery, first of all, for a food delivery company, and then parks it on a charging system, and then gets in, then walks across the parking lot, gets in his own personal Solo and puts on the Bluetooth and is driving home, and then passes, a charging infrastructure and sees a bunch of these being shared in a city, and then goes into his garage and puts it on the charging station in mom and dad's garage. That's what we're talking about here. This is the ecosystem that we're trying to build. And this is exciting, and people get it, and people realize that the world of transportation is changing, and you combine that with what's happening in the global world right now. And we're launching in the States first. And then when you think about the fact that we're going to build out a US facility for assembly and then launch the global vehicle at some point, a couple years down the road, a lot's happening for us, and people get it.
Shri out of the chat stole one of my two questions. The first question would be safety standards on this car. I mean, being in a smaller car. And the second thing, like when I think about like one-person vehicles and whatnot, I mean, is it discouraging you when you look at like the chart of like Harley Davidson and something like that with the single vision? To me, like people that want to be in a single vehicle to drive, the motorcycle market is to me that those people would be appealing to. But yeah, just real quickly, safety standards and then competition from the motorcycle industry.
Yeah, the safety standards, not for us. The vehicle is registered as a motorcycle, just to clarify, because it is a three-wheel vehicle, right?
Okay.
But just so you know, my background, more than 30 years in the automotive space, right? When I came into the company, I wanted to make sure that occupant safety was the number one goal for me, was occupant safety, right? So we went ahead and we made sure that we applied a lot of the same NHTSA safety standards that are in passenger cars. So we went ahead and applied a lot of the same NHTSA 214 standards and NHTSA 216 standards that are the same as in passenger car. So not all of them, of course, because this is a three-wheeled vehicle, right? But we do have front and rear crumple zones, triple side impact protection. And like I said, we put torque limiting stability control because for me, I want to make sure that, first of all, I can sleep at night, right? But also so that we can really look at a consumer in the eye or a fleet operator in the eye and know that we've done everything we can, even though it doesn't fall into a passenger car category, and protected the occupant as best we can in that category. It's a different category, right? So that's on the safety side. And am I worried about these other players who are motorcycle manufacturers and have been around for a long time? No, I'm not, because they have their businesses and their business model and their legacy supply chains, and they've been doing things for a long time in a very specific way. This company, which was birthed in 2015, was birthed with an innovative, imaginative, visionary thought concept to capture a very, very different mindset of people that was meant to revolutionize that space between micromobility and passenger car. And we've done it, if you think about it, we've done it with less than 80 people, and we've done it with less than $80 million total over a period of 6 years, but with very, very, very deep engineering expertise in that period of time, right? It's hard for companies that are very focused in very, very specific mindsets to make changes like that. And we've been able to do it very, very nimbly, very, very flexibly. And I'm proud of what we've accomplished. And I think that others will come along and try to do what we're doing. And I wish them success, by the way. And I think that they'll come along and catch up to us at some point. But in the meantime, I think we have something very compelling to offer because we're integrated. When you get into the vehicle, like Val said, it's a cockpit. You've got the Bluetooth, you've got air conditioning, heated seats, power steering, power brakes. You feel like you're in something really exciting and unique.
Yeah, it feels like you're in a car,
It does feel like you're in a car.
Not exposed to the outside. We've been on with Paul Rivera, who is the CEO, and Val Bhular, who is the CFO of ElectraMeccanica. Looking at our chat here, we've got a steady balance of bulls and bears, and that's what makes a market. So, guys, I know it's early. We appreciate you coming on. You're out in Vancouver, and thank you for waking up early for us this morning. We appreciate
Thanks so much, gentlemen, for having us. We appreciate it.
All right.
Thank you so much.
Stay safe out there in these crazy times.
You too.